Hello and welcome back to Global Value. In today's video, we will be performing a fundamental stock analysis of Meta Platforms, aka Facebook, ticker symbol FB. At the time of recording this video, Meta is trading at just under $204 per share. Over the past year, they're down 35%. Going back 10 years to their IPO, they've done very well. They've produced about a 21% compounded annual return since their IPO. So Meta at $204 per share is about $34 over its 52-week low, but down significantly from its 52-week high. Meta is one of the largest companies in the world with a $551 billion market cap. Some background about the business. Meta, formerly known as Facebook, is the world's largest online social network with 2.5 billion monthly active users. Users engage with each other in different ways, exchanging messages and sharing news, events, photos, and videos. Meta operates in two segments, their Family of Apps segment and Reality Labs. The Family of Apps segment includes Facebook, which enables people to share, discover, and connect with friends and family; Instagram, a community for sharing photos, videos, private messages, as well as feeds, stories, reels, videos, IG Live, and Shops; Messenger, a messaging application for people to connect with friends, family, groups, and businesses across platforms and devices through chat, audio, video calls, and rooms; and WhatsApp, a messaging platform that is used by people and businesses to communicate and transact privately. The Reality Labs segment provides augmented and virtual reality related products comprising virtual reality hardware, software, and content that helps people feel connected anytime and anywhere through its flagship Oculus and Oculus Quest product lines. Advertising revenue represents more than 90% of the firm's total revenue, with 50% coming from the United States and Canada and 25% from Europe. With gross margins above 80%, Meta operates at a 30% plus net margin. The company was formerly known as Facebook and changed its name to Meta Platforms in October of 2021. Meta Platforms was incorporated in 2004 and is headquartered in Menlo Park, California. Fun fact about Meta: Meta's founder and CEO Mark Zuckerberg purchased Instagram for $1 billion at a time when Instagram had zero revenues, and he didn't even talk it over with his board first. Instagram has gone on to be one of the most successful acquisitions ever, with scaling acquired companies as a core competence of Meta. We'll be looking at Meta's financials to come to a fundamental understanding of the business. We'll be performing an 8-pillar analysis as popularized by Everything Money. So let's get right into it. Starting off with pillar number 1, we want their average 5-year PE to be below 22.5. Currently, Meta's trading at a PE of 15.4. However, their average PE is almost double that at 29. So pillar number 1 is going to be an X. Relative to its PE multiple over the past 5 years, Meta is currently trading at the cheapest valuation it has been over this time frame. Pillar number 2, we want their average 5-year return on capital to be above 9%. Over the long run, a stock is going to return what its underlying business returns, and the business returns are really going to be determined by return on capital and return on equity. So in Meta's case, Meta does a fantastic job of earning high returns on capital. Averaged over the 5 years, they average about 28% return on capital, which is more than 3 times that 9% metric we were looking for. A big check on pillar number 2. Pillar number 3, we want to see 5-year revenue growth. Meta grew revenues from $40 billion in 2017 all the way to $118 billion in 2021. Scrolling down on their income statement, pillar number 4, we're looking for 5-year net income growth. Net income is this pillar in white. This has grown from $16 billion in 2017 to nearly $40 billion in 2021. So back-to-back checks on 5-year revenue and net income growth here. Next, for pillar number 5, we're looking at shares outstanding. We don't want any business to be diluting existing shareholders, as this ultimately robs business owners of their entitlement to a business's profits. Ideally, we want a company to be buying back shares and decreasing their shares outstanding. In 2017, Meta had about 2.96 billion shares outstanding, and this dropped to 2.86 billion shares outstanding in 2021. So they've slightly bought back shares. Based on their recent disclosures, they plan to continue buying back shares into the future. So that's a good sign for shareholders. Pillar number 5, we want to see 5-year free cash flow growth. Free cash flow is cash from operations minus capital expenditures and is represented by this column in blue here. In 2017, they had about $17.5 billion of free cash flow, and they grew this to $39 billion of free cash flow in 2021. So they've more than doubled their free cash flow over the last 5 years. Free cash flow is the life of any business and can be used to pay dividends, which Meta does not, buy back shares, which they have been, pay down debt, make acquisitions, which Meta has been very successful at, and reinvest back in the company. With their high returns on capital, reinvesting in the business is also a great use of their free cash flow. There are only a handful of companies in the world that are generating this much free cash flow in absolute dollar terms. So averaged out over 5 years, in an average year, Meta's earning about $23 billion of free cash flow. So we'll use that in pillar 7 and 8. So pillar number 7, we want to see how Meta is employing leverage in their business. We don't want to invest in businesses that are over leveraged because they have the potential to explode and to really suffer during downturns. So we're looking for Meta's net debt to be below their 5-year average free cash flow multiplied by 5. Fortunately, this is a pillar we don't have to worry about. They have about $33.5 billion of cash and cash equivalents on their balance sheet after they pay off all their short and long-term liabilities. So Meta has about a $33 billion cash cushion on their balance sheet. They've got plenty of cash to pay off all their debts and then some. Big check on pillar number 7. Hopefully they can put some of this cash to good work. Finally, the big pillar of them all, pillar number 8, we want Meta's market cap to be below their 5-year average free cash flow multiplied by 20. So Meta currently has a market cap of $551 billion. Multiplying their $23 billion of free cash flow times 20 brings us to $466 billion. So that's about $80 billion off of where their current market cap is. So pillar number 8 is going to be an X. One scenario to run through here is that if you took how much free cash flow they had last year, which was $39 billion, and you multiplied that by 20, assuming that stays the same, that comes out to $780 billion. If they're able to continue generating cash flow at last year's numbers into the foreseeable future, then their current market cap does look attractive to their free cash flow profile. That's something that you're going to want to research more in depth if you're thinking about investing into Meta. So in summary, Meta checks the box on 6 out of 8 pillars. It's a very strong growing business, and it only misses our valuation pillars. They have tons of free cash flow. They're still growing revenues, net income, and free cash flow. They're starting to buy back shares, especially now that they've seen this dip in their stock price. However, even though their current numbers are good enough for pillars 1 and 8, which are PE and market cap, averaged out over the past 5 years, they're a little off, which is mainly due to the growth that the business has experienced in recent years. If you're interested in learning more about Meta, I highly recommend reading through some of the company's filings. Try to build that circle of competence around the business by understanding their industry and by reading through some of their annual and quarterly filings. Well, guys, that's it for today's stock analysis of Meta Platforms, ticker symbol FB. Remember, Meta was formerly Facebook. If you enjoyed the video, please be sure to like the video, subscribe to the channel for more stock analysis videos, and comment down below what business you want me to take a look at next. Thanks for learning about Meta, and have a great day.